I just left $1,000 on the table today in 10 minutes. And if you don't want to make the same mistake, then this video is for you. Follow along. Hello guys, this is Jamal with Sold Too Soon, and here's the breakdown of my Meta trade today. For my morning watch list, I had Meta as one of my stocks to go long on because the whole entire market was gapping up due to all the war news. You can see how SPY gapped up quite a bit pre-market. So we were looking for everything continuation long from yesterday. Meta was also one of those that I was looking for continuation long. I had the initial idea when I marked the chart to go long around this level. It was like 680, which was an even number. Everything was good. But then after I charted everything, Meta broke above and I moved my long trigger to 682, which was also the pre-market high, just because everything was moving pretty bullishly. We know that we don't chase the stock long. So I missed my first entry, which if you look at it here on 1 minute, you'll see I missed my first entry. And this was the only pullback that we got at 843. And I had set my entry long somewhere around here, 682, but I never got filled. And this pullback was, even though it was close enough, it was still about $1 off. And because Friday contracts move so fast, I did not want to risk that. So I did not enter on this pullback. I was hoping I would get a little bit more of a pullback, so I would have a very tight stop loss. Anyhow, we missed that first initial move, and then we noticed that it's starting to make a range. And you can kind of see it more clear on the 5-minute chart right here, that it keeps rejecting this level 687.20. It rejected here on the 5-minute. On the 1 minute it rejected as well multiple times, but on the 5-minute you can kind of see it a little bit more clear. So it kept rejecting this 687.2 area. I got 1, 2, 3, and then it kind of broke down. At this point, I was starting to notice that SPY was also selling off at the same time. See how SPY opened pretty strong, and then we started getting this little tiny sell-off. You can see later it recovered completely, but at that point SPY had not broken pre-market high, so we were not looking for SPY to go long. We were just looking for a market direction. So we ended up watching Meta, and at that point I wasn't sure if I wanted to go long anymore because I did not have market backing. So the idea was to either go long at the break above 687.2 now for a continuation play up, or go short below our long trigger, which was 682. And then everything in the middle was going to form a range. And that's exactly what we did. Around 10 a.m. I saw like 9:55, you see this 5-minute reject again. We saw that the stock had pushed up right here and faked out everybody that was going long, and then right next minute at 9:59 you see that it went down. It broke down. That's exactly when I decided to take this short, and I took my entry exactly at 10 a.m. I had 680 puts loaded up. They were pretty cheap at that time because, again, it was a Friday 0-day expiration trade. We did not want to risk too much just in case it reversed, and we could easily stop out pretty quickly. So I had taken the 680 puts. I had gotten 85 cents full. This is the option chart right here, you can see, and this was right here at 10 a.m. So basically this confirmation candle right here at 9:59 that the stock had rejected pretty heavy. At 10 a.m. I took my entry. I got a fill of 0.85, pretty much bottom tick this, and then my stop loss was going to be a break above the 687.2 level, right above this previous high candle where we got our confirmation. Anyhow, we never broke that level, and I target profited across the way. I took my first profit at $1.25. Then I unloaded somewhere at 135 around here, and then I unloaded the rest at 155. But the stock kept going down, and I left way too much money on the table. The option contracts, I exited 80%. They ran up to 140%. So I could have trail stopped over there, and there's a few mistakes that I made that I want to show you guys as a learning curve on what to do and what not to do. So once I entered the trade, I was more focused on the P&L rather than focusing on the chart. And the chart was dictating that, hey, we're making a range over here. You can take profit right here at 682. But I ended up taking profits based off of my P&L, and I left quite a bit on the table. And instead of trading the chart and letting it run or even trail stopping it. So that's the lesson that I wanted to teach you guys today, that if you're in a trade, don't trade your P&L, because the P&L more than likely will give you a false reading. It's okay to lock profits in, but always if you're keeping runners, if you're in the position to hold runners, then keep those runners for your levels that you've already pre-marked, because more than likely the buyers are stacked at those levels and the price will come back down to that level. That's exactly what happened. You can see right at 1020, buyers stepped in. We could have taken profits right here. Even on VWAP, we could have taken profits, but it came right to our level. And this is where I should have flipped the script and gone long, and would have equally made that same trade, the same percentage on the long side as well. But because of Friday, I was locked in on my profits, and I did not want to give anything back to the market. And I took that trade, and then I called it a day.